Bitcoin is currently sitting at 76,999. Just like I said in my old video, I was hoping that Bitcoin would bounce back up to around $77,000. That's where my put options, needed. And here we go. We actually just hit 77. So we actually pushed way higher, all the way to 77,300, and my portfolio is finally green again. I have fixed it. So I want to talk about it today. I want to talk about why we saw this bounce in Bitcoin, and as a result, my puts were deep underwater, but now my puts are in profit, and I love that. So what's happening? Why is Bitcoin bouncing up? First and foremost, guys, this is not financial advice. This is not legal advice. I'm not a financial advisor. I'm just documenting my journey on how I'm taking my Bitcoin options account from $1,000 to $10,000. All right, cool. So why is Bitcoin up? We basically have this post from Truth Social that Donald Trump posted. Well, in a nutshell, it's a very hilarious post. But what's happening here is that this comes shortly after, just a day earlier, when President Trump posted that a memorandum of understanding for peace has been reached. So basically, over the last 24 hours, there's been some back and forth chatter with, the USA and Iran of a potential peace deal. So they've drafted a peace agreement, so there will be final announcements that will be made hopefully today. So the market reacted positively to that. That is why Bitcoin bounced from 74,000 all the way to 77,000, and my portfolio is loving it. And I want to talk about why and how my portfolio is green today. As you guys remember, in the last video, I've made a few adjustments, few changes, few introductions to the portfolio, and I basically want to talk about it real quick. Okay, so first things first, what changed in the portfolio? Okay, I want to talk about the introduction of perpetual contracts. Okay, perps, what you see here. Let me minimize this option, and let me show you these two positions right here. So you would have seen here, guys. Let's see, why isn't it showing my average price? There we go. Let me just fix this real quick. I just want the average price to be shown. I want to move this right here. There we go. Perfect. Okay, so I just wanted to show you the price at which I entered the positions. So I added perpetual contracts to the position, all right, to my account. Why did I do that? Because now, because of this new addition, my structure is starting to work better, right? So I've added a perpetual contracts. I've reduced the dependence on the long calls. As you remember, I had a massive long call position for Bitcoin, the long call 80K June call, which I closed. It was this one right here. So I sold it. As you can see, it was a June call, a very big size, 0.1, which is about, $7,600, which is a massive size to the upside. But I've introduced the perpetual contract because I feel like it's a cleaner structure overall, and it also helps with risk management. Okay, so let's talk about the long perp here. What does this position essentially do? So I have a 0.03 Bitcoin size of this position, which basically equals $2,200. So with this contract, I'm basically participating to the upside. So if Bitcoin goes up, my position increases in value. As you can see, I'm already making $70 here, $157 return on investment, and my average price was 74,600. So when Bitcoin was way down here, around 74, that's when I entered the position. And now Bitcoin is seeing a very nice bounce. As you can see here, seeing a very nice bounce, and that's why I am in profit. Okay, the reason why I introduced a perpetual contract is because, number one, there's no theta decay, meaning I'm not losing money in the position as opposed to the long option call that I had, right? It's easier to scale in and out, right? It's more liquid. As you can see, there's lots of bid and ask price, right? So I can scale in and out of the position very easily, and also it's better capital efficiency on the portfolio margin, right? For this position, I only needed about this is 0.3. I can't really remember, but let's check how much I needed to open this position. Let's see here. the amount is to Bitcoin. Yeah, this is the exact position size. Let me change this to Bitcoin. Right, 0.02, which is about 0.3. So the margin required for this position was about 0.009 BTC. Let's do it on the dollar term so that you guys can understand a little bit better. Let's do this. Let's do Bitcoin 0.3. There we go. So to buy this position, I'll just need $64 in margin. Very capital efficient, right? But if it was a long call position, it would have costed me a little bit more to open up the position. So margin would have been locked. And portfolio margin works best when there's a lot of margin available for the account. Okay, so that's why I have this position. And what I'm going to do, I'm going to scale this position up as Bitcoin continues to go down. Or if it goes up, I can definitely scale into this position and increase the size as well. So this is beautiful. This basically gives me upside participation. So Bitcoin can move from 76,000 to 80,000, 90,000, 100,000, and this position is going to print. So this is basically a set and forget. I don't really care much about this. I just want upside participation, and I'm going to scale this position. Ideally, I want at least 0.1 Bitcoin here. 0.1 is about $7,000 worth of notional size. Okay, what with the current price. And if Bitcoin goes from 76 to $100,000, I'll be making a lot of money. So let's talk about a perpetual short position. So this is a very small tactical hedge. What do I mean by that? When Bitcoin crashes, I need to have some insurance or some hedge to help my portfolio, my maintenance margin not to spike up. Like I told you guys, I want this thing to be under 50%. Okay. If it goes to 100, my whole account gets liquidated or the whole account gets blown up. So this very small size, this is just a 0.01 Bitcoin position, cost me about $700 in notional size, but I paid, I don't know, how much did I pay for this position? I paid about $21 for the position. Again, this is a powerful thing about portfolio margin, and especially with perpetual contracts, the margin is very, very efficient. It's very smooth and very easy on the margin. So this per position is basically saying that if Bitcoin crashes down, I enter this position at 77,240 average price. So if Bitcoin crashes down, my maintenance margin is not going to spike up that much because this is basically helping the entire account, right? So what I've also done is, if you go to the I wanted to show you guys the let me add the open orders. There we go. So these are all the open orders I have, right? So basically I have open orders at, as you can see, 73, 74, 75, well, 75, 74, 73. So if Bitcoin crashes, all these short per position is going to open up. So it essentially is going to absorb the shock of the crash, and it's essentially going to help the entire account. The account is not going to blow up, right? The maintenance margin is going to decrease or be balanced out. So this is basically a hedge and insurance policy. It helps smooth out the maintenance margin, basically, in essence. It balances the portfolio, during dumps or during crashes. This is something that I did not have in the previous video, and it's a game changer. It really, really is. So that's basically why I introduced the perpetual contracts. One of them is for upside participation, and one of them is for, just to balance out a portfolio in terms of a crash. And that's why the size is different. Here it's a much bigger size, 0.03. This is only 0.01. And I will be scaling this up because, I am bullish. I am bullish overall. So I don't really care if this position goes in the red as Bitcoin bounces back up, because it is very small. It's not doing anything to the portfolio. It's just an insurance. And that is a beautiful thing when you're managing a portfolio. You have to make sure that your positions are insured, that the whole account is insured. You have to hedge your positions. It's very crucial and very important. Right. So why this system works better than just having a long call? Like I mentioned, the long call gives me convex upside. That is true. But theta eats it every day. It has time decay. The perpetual contracts has no theta, meaning each and every day that I have the long call, I'm losing. It's a little bit, but I'm still losing a little bit on the position. And again, it requires a little bit more margin as well, and it is sensitive to time, so that's why I prefer the perpetual contracts as opposed to long calls. And that's basically it. So now, My puts are winning. Remember when I told you guys that my puts were deep underwater? What do you see here? My puts are basically winning right now, which is beautiful. So essentially what's happening here is my 77,000 put is in profit. Obviously, Bitcoin is reclaimed it, so it's in the green. I'm up 36% on it. I'm basically saying that in 4 days, by May 29th, I'm seeing that Bitcoin is going to be above 77,000, and I have $195 left to be made on the position. I've already made $100, 33% up. So 76,000 put side. Obviously, Bitcoin is way above that, which is great. Theta is doing its work. I'm getting $19 each day for the position. I'm getting $7 each day for the position as well. And I have left $48 left on the table to be collected. I've already made 37. I'm up 43%. So in total, I still need to make $245 for these two positions, and then I have $135 that's been made so far. So if Bitcoin stays around here, if a peace deal gets announced and gets signed and everything, Bitcoin is definitely going to be above 77,000 in the next 4 days, and I can basically squeeze in this entire amount, right? All of this together is going to give me about 300 and something dollars, right? And remember, I've already taken profit on the short calls. Remember, I'll put the profits that I've taken on the screen. I took about 130 dollars on the short calls that were winning. I closed the positions for a win, and if you add that with these profits, that will give you about $500. But if you subtract it with the loss for the long call loss that I just closed out, $200 loss, I'm still net $300, right, for this cycle, which is basically my goal. My goal is to generate between $300 to $400 in a 7 to 14 day cycle. So we're still net, right? I had to pay a tuition fee with a long call to basically formulate the strategy and have the strategy work for me. Okay, so that is it. So what is the next plan? The next plan is to reintroduce new short calls on June 5th. Okay, so I'll be opening up new June short calls just to complete this triangle, because this triangle is not completed. I only have the puts, I need to have the calls. So June 5th, I'm going to open up, some new short calls. I'm waiting for Bitcoin to push up. If there's some good news, Bitcoin can probably push up to 77, 78K. This will be a great time to sell some short calls, right? To get more premium, right? So that I can complete this triangle. Remember, this triangle is the short puts and the short calls together. I will be looking to close out these positions probably tomorrow. I need them to be in a much more better profit. Remember, there's still $247 left on the table to be made. And then I'll close the positions. Overall, how's the account looking? Remember, the account was down, and we back up 4,000. We were on 4,100 actually, but yeah, we back up, and that's what's happening. The account fluctuates. The account fluctuates, and that's what's happening. But yeah, the goal is still to get to $10,000, guys. I just wanted to give you a quick portfolio update that the structure is working right now. When it comes to portfolio margin and options trading, especially with Bitcoin, it's about survival first, not just collecting premium. You have to find a strategy and engine that works, and I'm very happy that I've introduced the perpetual contracts, which really helps balance a portfolio. Now I can print more premium at ease. So that's it, guys. Hope you like the content. Don't forget to drop a comment, like, subscribe, and share the video as well, and I'll see you guys on the next one.